So we expect the region to grow by about 4.5%. ASEAN countries will grow by about 4.9%. Compared to 4.5% last year. And that's because the ASEAN countries were export dependent, and so they were hit more badly last year. This year, with the stronger export, we expect that growth will be higher this year than last year. But so far, the impact on headline inflation has been quite small. It has spiked up some, but not much. And more recently, it has come down again. But we know that the Middle East conflict, it can escalate, and become a lot worse. And if it happens, there'll be even more disruption. And then there could be a spike in oil prices again. And so this is the risk that we're trying to avoid, I think, But and we don't think we hope that it doesn't materialize. China is the biggest trading partner for ASEAN. And ASEAN turned out to be the biggest trading partner for China during the pandemic. So they are each other's biggest trading partner now, right? And so a strong growth in China would be good for the region, And similarly, a strong growth in ASEAN would be good for China.
Hello everyone, welcome to SFC Market Exclusive. As we step into 2024, uncertainties still loom large on the global outlook. What does the economic future hold for the ASEAN+3 region? And how resilient is the region in the face of these uncertainties? Amidst evolving landscape, what challenges lie ahead and what opportunities stand to be seized? To explore these questions, we are privileged to be joined by Dr. Hoe Ee Khor, the Chief Economist of the ASEAN+3 Macroeconomic Research Office. Hello, Dr. Khor, welcome. Let's start with the broader picture. What will be the main engine to the ASEAN+3 growth in year 2024?
So I think the ASEAN+3 region has done well. Last year it grew by about 4.4%. And this year we expect it to grow by 4.5%, just a little bit higher, okay? But last year turned out to be a good year because China's growth was quite strong, It was 5.2%, as we all know. Which is a big rebound from the year before that. So I think that set the basis for this year. Last year, the region was hit by very strong headwind from exports. So this year, the headwind has receded and it's turned into a bit of a tailwind, but it's not a very strong tailwind. But nevertheless, this year we expect export to be one of the drivers of growth. So unlike last year growth was basically driven by domestic demand, and that will remain this year. So domestic spending is quite resilient and will continue to be a main driver of growth this year, and it will get even stronger. We have seen some of the indicators, and retail sales in China, for instance, is picking up. So that's important because that will feed into higher imports, for exports from the region. And also from the US, we see that the domestic spending is also picking up. Last year, the growth in the US was driven by services, and that's why exports was quite weak to the US. But there's been a rotation of growth now. And so the growth in the US this year will be driven more by spending on goods. And the spending on goods will feed into higher imports from the region. So the main factor will be domestic spending in terms of higher consumption, but also stronger investment. And then there will also be stronger exports to, from the region, both to China as well as to the US. And the final factor is tourism. Tourism, was hit very badly during the pandemic, and it's been recovering last year, but it has not fully recovered yet. So this year, we expect tourism to continue to recover and reach more than 100% of what it used to be during the pandemic. Yeah. So those are the four main factors, driver of growth for the region this year. So we expect the region to grow by about 4.5%. ASEAN countries will grow by about 4.9%. Compared to 4.5% last year. And that's because the ASEAN countries were export dependent, and so they hit more badly last year. This year, with the stronger export, we expect that growth will be higher this year than last year. Yeah.
In a previous forecast about 3 months ago, you warned against fully discounting the risk of recession in the United States and Euro area. What is the probability of recession in these two economies? Which economy is more worrying?
Yes, we were worried that last year the US would have a recession. That didn't happen because the US turned out to be much more resilient than most analysts expected. And so I think the number for the US just came out for the fourth quarter, and it was still stronger than expected. So the US for the year as a whole is now growing by 2.5%. This year, I think we all expect US to slow down this year. The question is whether it's going to be a slowdown or a recession. And I think now most of the analysts expect that it will be a slowdown, not a recession. The risk of a recession has receded also. Before, I think the Federal Reserve still has a relatively high probability of a recession for this year. It has reduced the risk from 70% to 63%. Okay, that's for the Fed, the US Federal Reserve. But in the private sector, it was more like 40%, and they reduced it to 20% this year. So there is still a risk. It's smaller, but still a significant risk that we cannot rule out. And I think this risk is linked to the dynamics of inflation. Inflation has come down to about 3% now, and everybody expects that it will continue to go down slowly. But if there is a shock somewhere, a supply shock, and inflation were to spike up again, I think that will put pressure on the Fed to raise interest rate, in order to contain inflation. And if that happens, then the risk of inflation, of a recession in the US will be much higher. So it is a small risk. We expect the US to slow down this year rather than going to a recession. But nevertheless, it's a risk that we cannot rule out completely. And if it happens, then what happens if there's a recession in the US and in Europe, then it's going to shave off growth from the region by about half. So instead of 4.9, you'll be looking at 2.5% growth, okay, which is a very substantial reduction. This is, coming out from the model, the simulation model that we run, okay. So we hope that it doesn't happen, and that because that's a tail risk. It's not our baseline. Our baseline is that the US will slow down, have a soft landing, inflation will continue to come down, and the region will be able to grow faster.
So to what extent will geopolitical issues pose a threat to regional growth? What is the biggest uncertainty this year?
Yeah, geopolitics has been a big shock, right? As you know, the war in Ukraine, although that is, subsided, the risk from the war in Ukraine. But then the Middle East flare up, last year, sometime in October, right? Because of the war in Gaza. And so far, the spillover from that Middle East, the conflict in Gaza, has been relatively contained. It has affected shipping. So a lot of ships from Asia to Europe has been diverted. They're now going through around the Cape of Good Hope instead of going through the Suez Canal, right? And that has added about $1 million US per vessel in terms of the cost, right? And it has also increased the length of time by about 10 days. So overall shipping cost has gone up, and that feeds through into the price of product, that you receive from. But so far, the impact on headline inflation has been quite small. It has spiked up some, but not much. And more recently, it has come down again. But we know that the Middle East conflict, it can escalate, and become a lot worse. And if it happens, there'll be even more disruption. And then there could be a spike in oil prices again. And so this is the risk that we're trying to avoid, I think, But and we don't think we hope that it doesn't materialize, but it can. We cannot rule it out again. So that's a geopolitical risk. The other geopolitical risk is between the tension between US and China, and that has continued to escalate after Trump and into Biden's year. But more recently, I think we see that both administrations are trying to cool down the tension a bit. Then I think it's good for not just China and the US, but for everyone, because it means that there will be less disruption to trade, investment.
Meanwhile, we also anticipate major central banks to cut rates this year. How soon and how quick you think the Fed, for example, should act? And will that bring positive effects to Asian economies?
Yes, I think the year ended on a positive note in that sense, because I think most people feel that the US economy has achieved a soft landing, and the Fed came out and said that, there will likely to be no further rate hike for the, right? So now the expectation is when the Fed is going to reduce the rates, right? And the market thought that maybe they will start reducing in the second quarter. But I think the expectation is that more likely, if inflation remain well behaved, the Fed will start cutting rates maybe in the second half of this year, rather than. But already, even though the Fed has not cut the rate, the interest rate has already come down. Right? If you look at 10-year yield, if you look at 2-year, 5-year yield, they all have come down. So it was around the high 4%, between 4.5% to 5%. Now it's in the low 4%. It's just above 4%. In fact, it went down to below 4% earlier. So everyone is in a waiting game to see how inflation behaves. And so there's a lot of noise. So, I think you're going to see that kind of a bumpy ride, going forward. When new data comes out, if it is a positive data, the market will rally, and so that'll be good for. But in any case, I think the higher for longer is no longer the baseline. Now the issue is how soon the Fed is going to cut rate and how quickly rates will come down. So once that, I think that has changed the setting for central bank in the region too, because many central bank in the region already peaked and are on hold as well, and they're waiting for the Fed to cut before they move themselves. But some of them may start cutting earlier, because if you look at the inflation dynamics in the region, inflation has come down much faster here than in the US, and many of the central bank are ready to cut, but they are holding back because if they cut, there's pressure on the exchange rate. The exchange rate of the countries in the region have already depreciated quite a bit. But because they are depreciating together, it's okay. They don't feel like they are the only one that's getting beaten up by the Fed. But certainly, I think they want to prevent the exchange rate from depreciating further or weakening further, because if the exchange rate is too weak, there's a pass-through effect from higher prices of commodities into inflation. It is not a very strong pass-through, but it's there. And so most of the central bank, I would rather wait until the Fed cuts before they go along with that. Yeah.
What is your outlook for China's economy this year? How much of impact does China have on ASEAN's economy?
Yeah, we are quite positive about China. We are very optimistic. In fact, if we compare our forecast with the analyst forecast, I think we are at the high end, because we are expecting China to grow by 5.3%, right? Slightly higher than last year, but most of the analysts are expecting growth of below 5%. I think the average is maybe between 4.5 to about 4.5, 4.8, in that range. So we are optimistic, and the reason we're optimistic is because we still see China has not fully recovered. Okay. And last year was not a very good year for China, even though it grew by 5.2%, because of the headwind from exports, and also because we see that domestic spending has not fully recovered. So this year, we expect China economy to do actually better, because the headwind from the real estate sector is going to be smaller, okay, and maybe even turn positive this year if the real estate sector is able to recover slightly. And then the other sectors are doing well. Manufacturing is doing relatively well. If you look at manufacturing investment, it's actually quite strong. And I think I mentioned earlier that the retail spending is also picking up. We see that in the data, the indicator that has turned up. So for all those reasons, we think that this year the economy could actually be stronger. Growth could be stronger than last year. Of course, along the way, there could be other shocks that happen. But we are optimistic that the Chinese economy will not be as weak as some of the other estimates that we have seen.
What's your outlook on the cooperation between China and ASEAN countries in terms of economy and trade?
China is the biggest trading partner for ASEAN, and ASEAN turned out to be the biggest trading partner for China during the pandemic. So they are each other's biggest trading partner now, right? And so a strong growth in China would be good for the region, and similarly, a strong growth in ASEAN would be good for China. But China is also the biggest trading partner for 150 countries around the world, right? So it's a very important economy for everyone, But I think the main thing about China now is that because China is at the stage of development where it's beginning to outsource, it's moving up the value chain. So it's beginning to outsource the labor-intensive sectors, like garments, and some parts of manufacturing as well. So if you look at Vietnam, Cambodia, and now Malaysia, they are attracting investment from China now in the manufacturing sector. So the Chinese industries are beginning to move their production to Vietnam, to Cambodia, and the ASEAN countries. Besides that, China is very probably the most advanced in terms of electric vehicles, batteries, solar energy, wind power, mills energy. So, and because of the climate change, a lot of countries are now moving away from fossil fuel to renewable energy, right? And so many of them are trying to attract, investment into the new EV industries from everywhere. I mean, not just from China, but China is one of the biggest investor now, in EVs, right? So Indonesia, because it has a natural resource in nickel, right, is a very attractive destination for Chinese to set up production, because they can leverage on the nickel deposit there. But also Thailand and Malaysia, because they already have an auto industry and they want to shift from fossil fuel to electric vehicle. So they are also trying to attract the Chinese, electric manufacturers to move their production to those countries. And besides that, I think they're also trying to attract investment in solar energy, in wind power energy, and this other area. So there's a lot of investment flows between China and the rest of the region, which is very important, because in the old days, China's investment in most countries used to be just in natural resources, mostly copper, iron ore, coal, and all that. But now China is also investing in manufacturing and services. Alibaba, Tencent, now they are big players in the global stage, and they are also investing abroad because they also want to, diversify the market to other parts.
2 years into the implementation of RCEP, what are the benefits for regional trade?
I think, unfortunately, RCEP came into effect during the pandemic, right? When things are very slow. But one of the big benefits of RCEP, I mean, first of all, it's the biggest trade agreement in the world, right? It's about 34%, 35% of the global economy. Secondly, I think the most important part of the benefit of RCEP is that it liberalized tariff for intermediate goods. Okay, at a time when you have a reconfiguration of trade, right, and the reconfiguration of trade means that a lot of the China is outsourcing the production of inputs, intermediate products, okay, which are cheaper to produce in other countries, okay. In the past, this would attract tariff, okay, when you export or import intermediate goods. But under RCEP, there'll be no tariff on intermediate goods as long as there's a certain amount of labor content, domestic value added content, okay. So because of that, it means that a lot of the reconfiguration will take place within the region because they can now import and export freely across the border. You know? So that I think that's one of the big benefits of RCEP. The other benefits would be that they are also liberalizing services sector, and services is one of the most protected sector anywhere, right? So because of that, I think you also open up digital e-commerce, and other forms of services across the region. So I think if the region can take advantage of RCEP to remain more integrated, and this will help to offset some of the protectionist tendency that we see now in the US, in Europe. There's a lot of populist protectionist measure now being taken by those countries. And so the region can be a model for open trade, and I think that's very important, not just for the region, but for the rest of the world, that we continue to uphold, globalization, multilateral trade, rule-based multilateral trade at the same time. Yeah.
Thank you, Dr. Khor.
Thank you.
As Dr. Khor said, stabilizing industrial and services activities in the Chinese economy are helping to provide additional momentum to the ASEAN+3 region in 2024. That's all for today's show. Thank you for watching. See you.